What up, traders? Welcome back to the SPACs attack. You guys already know where you guys are at. We're going to talk a lot about some SPACs moving today. We got a little bit getting a little pump up, but definitely we'll talk a little bit about that. We got a great interview to get into. Yes, we're going to get into BOXED.com, so definitely stay tuned for that. Give us a big thumbs up, and let's go ahead and start the show. Welcome to the SPACs attack. Boom, baby. What's going on, traders around the world? I hope you guys are excited as I am for the interview coming up next. But definitely, let's go ahead and bring on my man, the brains to this show, Katje.
Hey, what's going on, brother? Yeah, excited for this interview today. We're going to talk BOX, that's SVOK. We also have some headlines out there. And Mitch, for the second day in a row, we got 2 new deals. So, that long holiday weekend, looks like everyone wants to come back from the holiday and start announcing these SPAC deals. So we'll definitely get into that too.
Yeah, it's a tough day in the market out there right now. We're seeing an overall pullback in the market. We'll see if we get some pushback towards the 12 o'clock hour. A lot of times you can get sometimes kind of these downward trends at the open and then a reversal going into the close. So that's what we're going to be paying attention to. And I'll just say that for overall stocks, not just SPACs itself. Definitely seeing a little bit of a hit. If you have a portfolio today, I'm sure you're not seeing too many green action out there. Got a decent down day, but hey, these are days where you want to go ahead and look for opportunities out there to go ahead and buy on the dips versus buy on the rips.
Yeah, definitely. That's why you have a plan, right? You have some stocks on watch list. With Benzinga Pro, we of course, there's a watch list tool where you can add tickers right there, and then you can watch. And on a day like today, it might be time to size into some of these positions. Because it's a buying opportunity on a red day like today. So, definitely an opportunity. But we do have some movers out there too, Mitch, to talk about.
What?
So we got some. We got some that I found that are green today. So we'll get into that though. But yeah.
Did you say take us back to the headlines, Chris? Let's go.
I did. Let's go.
Take us back.
All right, guys. Yeah, so let's get into headlines. So a couple of the green SPACs today are moving after being mentioned by Jim Cramer last night. So, of course, we've talked Jim Cramer lots of times on this show. He has had a tendency to flip-flop on how he feels about SPACs. Now he's going after de-SPACed companies. So he actually called out 4 names last night on the show that went public via SPAC that he thinks, could be good stocks to get into. So his de-SPAC favorites are SKIN, STEM, SOFI, and MAPS. So I should note that all of these are up, decent since the original IPO. So he's not really picking any under the radar ones here. We've called most of these out recently. SOFI we've discussed heavily. MAPS, I am long. I've been talking about that one for a while. That one was actually up double digits in after hours trading last night. And at least on my watch list, looks to be one of the biggest movers today in SPACs. Skin also up 5%. So Cramer sometimes has been able to move some of these SPACs on mention, and it looks like that's what happened last night. But pay attention to some of these names getting love. We have LEGO, that's Lego, not the toy company, but a SPAC merging with Algoma Steel. This is one that I own. Yesterday, it was announced that the company got up to $420 million in federal funding to transition to cleaner technology in Canada. They're working on phasing out their coal-fired processes for electric arc furnace production. So the company had a news conference with Prime Minister Justin Trudeau where they announced that, that's a big deal, right? You got the Prime Minister of the country announcing up to $400 million in funding to help your transition. This is a steel company. We've seen steel very hot this year. This is one I am long and I like, and I don't think this story is getting enough attention. That deal yesterday, shares are still at 10.17. So keep an eye out on LEGO, guys. That's one of my favorites here, a steel SPAC deal.
Hey,
go ahead.
There go my ego.
Every time I see that ticker LEGO, Mitch, I really just wish it was the toy company, because after all, I spend enough money on Legos each year to where why would I not own stock of that company? But it is private, unfortunately. Another favorite of mine, GNPK. This is one of my favorite space stocks out there, merging with Redwire. So Redwire is going to hold an Analyst Day July 9th. That's 2 days away. GNPK was one of those space stocks that still hasn't really caught up to the others that have been running. We're trading at 10.57. I really think this gets some interest this week, with that Analyst Day. So keep an eye out on this one. I'm watching it, at the 10 to 10.50 level. We're slightly over that right now, but GNPK on watch today. Our two deals yesterday, we had KVSB up 16% on that deal with Nextdoor. That's one of the biggest, jumps that we've seen in the last 2 or 3 months on deal announcements. So positive sign for the SPAC market. We also had CFV up 1.5% on that deal announcement. So another day with 2 deal announcements, both trading favorably at the end of the day. And then speaking of deals, of course, as I said, we had 2 deals today. So up first, we have ATHN bringing solar energy company Heliogen public. This is a leading provider of artificial intelligence-enabled concentrated solar energy. So Heliogen has a mission to empower a sustainable future with low-cost, dispatchable, concentrated solar energy as an affordable alternative to fossil fuels. They offer a closed-loop AI-enabled technology for commercialization. They partner with customers in the industrial, mining, and energy sector. They have some proprietary technology to help concentrate the sun's rays and, do that solar energy. So again, I don't have all the information on this one yet, but definitely the industrial, mining, and energy sectors being the focus here. This was done at a $2 billion valuation. Company still in the early stages, $8 million revenue projected this year and $24 million in fiscal 2022. So this one I need to do some more research on. I do like the solar sector. I know Mitch has been a big fan of the solar sector as well, but it looks like this one, definitely on the early side of things. And then our other SPAC deal out there, DMYQ, that's DMY Technology Group Inc. 4, from our friend of the show, Niccolo Damasi, announcing a SPAC deal with Planet. This is a Earth data and analytics company powered by satellites, valuing the company at $2.8 billion. $200 million pipe includes investments from BlackRock, Time Ventures, and Google, who was already an investor in Planet. That's a good one here in the pipe, right? Anytime you have Google involved in the pipe on a SPAC deal, I think it definitely jumps out. Planet has a network of 200 satellites. They're the largest Earth imaging satellite company, producing 25 terabytes of data per day. They have over 600 customers who pay subscription revenue to the company, those customers coming from 65 countries. Segments the company targets include agriculture, defense and intelligence, civil, mapping, forestry, energy, finance, and insurance. So they have this huge data set. They call it a Bloomberg-like terminal for Earth data. They can sell their data and analytics multiple times to multiple customers, which helps with their margins. So Damasi praised the company's scalable data as a service subscription business, saying it's the fuel that powers the global economy. He also said Planet is on the path to become one of the most consequential companies in a generation. So Planet intends to use the proceeds to expand their operations and services in existing markets and expand into new markets. They said that they're years ahead of the competition with the largest fleet. They also are targeting 2 multi-trillion-dollar economic shifts. That's the $100 trillion market of digital transformation and a $53 trillion market for sustainability transformation. So revenue of $96 million in 2020, $113 million in 2021. Revenue has grown 27% annually from 2016 to 2021. They're projecting revenue to grow 44% annually from 21 to 2026. And 2022 revenue of $130 million estimated, with 65% of that total already fully committed. Revenue split fairly even by sector. I really like this part. Civil makes up 24%, agriculture 23%, defense 22%, and mapping 17%. So highly diversified across several sectors. We're fans of satellite companies on the show. What do you think, Mitch, of this satellite company? Already 200 satellites out there, and they said they might be years ahead of the competition. What do you think of this deal that Damasi's bringing us?
Damasi. You're taking all my money, man. You're taking all my money. All I could do is I don't do this often, guys, buy a CEO, but man, this guy just keeps taking the deals that I like. So, hey, shout out to Nicolo. Definitely what I look for, right, in these companies, right? I've talked about it. Space, what I look for, satellites. We were talking about it yesterday. It looks like we got a couple of these now coming through. So now one of the things that you need to start thinking about is, like I talked about it yesterday, that basket approach, because I think this is really where you're going to start learning that, hey, there's so many out there now. Okay, so now I got to go ahead and figure out which one's going to be the winner. Sometimes you can't really pick the winner, but one thing you can do is diversify in that basket and look for the technology itself to increase in the TAM. So that's what I'm going to be looking for. I've been a big believer about satellite imaging. I mean, since day one, Google Earth, but Google really, is going to get towards the point where their technology is actually going to be a little bit back, and it's kind of in prior. They need to advance it. And so, like what you mentioned about the pipe was very interesting, because it could be something like that. They still need to advance their data set. And so one of the things that is being mentioned is something like this. One of the things that I always like satellite companies is because you mentioned their defense contracts. Those pay. Let me just say that.
I couldn't even get into all the names, but Mitch, they have over 600 customers. I saw NASA on there. I saw the U.S. government on there. But Google invested in Planet prior to this deal, and they're coming back with their checkbook, investing in the pipe. So, it seems to me like they believe in this company. They're not just saying, hey, we already invested in this company. We're just going to sit back and, watch. They're saying, yeah, we see growth ahead. We're going to invest again in the company. And, I really like the fact that diversified revenue, Mitch, 23 or 24% coming from ag, 23% coming from defense, not all powered by the same segment, which could help, when one area sees a decline. So I like this deal. We'll have to get in touch with our pal Nicolo Damasi to come on the show, and he can break down, exactly why they did this deal. So I'm looking forward to it.
Well, once again, taking all my money, man.
And he's got more SPACs coming. He's got another one, I think, that still hasn't IPO'd yet. So, we're going to have to get into that one as well. So.
Hey, at least I can't say the guy doesn't have a good eye. He gets into a lot of the things that in the areas that I like. When you think about it, it hasn't only been in one area, right? We first started kind of more in sports, RSI, Genius Sports, then moving into quantum computing, now moving into satellite imaging. different areas, but definitely areas that are on my radar, you know, and then that's what I would mention. It's not necessarily it's just Nicolo. Look at the areas that he's going after, and that really interests me. Those kind of areas: sports betting, sports data, satellite imaging, and in the long run, for sure, quantum computing. I mean, we know how that's really going to play in. I mean, where has computers gone, right? I mean, that's just the next step. Like you can't say that, you know, 20, 30 years ago, you thought computers were, I mean, I still remember the internet speeds of dial up and then you'd get disconnected because someone picked up the phone in the house. You'd be like, no, why'd you do it?
I was downloading a song and now it's not gonna go all the way.
That's where we're going to. And so this is what I always try to do. You guys know I'm always about the story. So let's go ahead. We'll transition here and segue into another story, which is boxed.com. Let's go ahead and let's get into that area. This is where we go ahead and unlock some SPACs. Let's get into our interview. We got them already waiting and we're super excited. Let's get it started.
All right, guys, super excited. Another exclusive interview here on SPACs Attack. Joining us on the show today, we have Chieh Huang. He is the co-founder and CEO of BOXED, company going public with Seven Oaks Acquisition Corp. That ticker is SVOK. Welcome to SPACs Attack, Chieh.
What's going on, Chris? What's going on, Mitch? It's great to be here.
Welcome.
Avid viewer. Honored to be the first time guest here. So
we're so happy to hear that. Awesome.
As long as we got a little bit into the future, we're not on dial-up. The connection is good.
It's also going to be hard to follow what you guys are talking about with Nicolo there. So I'll try my best though. You know, it's hard. It's a hard act to follow.
Hey, well, definitely. One of the things that we like to do is definitely unlock SPACs. So let's go ahead. Let's get into some questions. Chris knocks them out, and I'll be back with some of my own.
Awesome. So, you know, Chieh, we're SPACs Attack. We talk all things SPACs and former SPACs. So the big question we always like to start with, you know, is why a SPAC deal to bring BOXED public? And was a traditional IPO also a consideration for your company?
Sure, it was also a consideration for the company. But when you look at the SPAC product, I do think we will be the poster child of how to use that product and that path to public in the right way. So two main reasons why we did it. One is the quantum of capital that we could raise. So when you look at the pipe that we raised, as well as the money that SVOK has in trust, you know, you really have a quantum of capital of over $300 million, depending on redemptions. And so that ability to raise over $300 million potentially, not available to us if we went the traditional way through a traditional IPO. Second is also, how can we tell the story about the future? So when you look at BOXED, there's some really exciting business units that are growing. One is our B2B business. After we took a hit to it last year because of COVID, that business is now growing again. And so what does that look like into the future? As well as that software business that you talked about when we announced the deal a few weeks ago, selling the software that underpins our entire business, like everything that you see behind me right now. That's also a business that just got started. If we filed a traditional S1, went on a traditional roadshow, you know, we just really couldn't tell that story the way that we wanted to.
Perfect. Yeah, I love the background. You know, you're there at work showing us, you know, the behind the scenes experience now. So, you know, you dove in a little bit to some of the specifics, and we'll get to that later on. But for viewers out there who don't know BOXED, give us the brief summary of what BOXED is all about.
So we are an e-commerce wholesaler as well as an e-commerce enabler. So on the e-commerce wholesale side of the business, we service, you know, businesses around the country, consumers around the country, looking to stock up on bulk consumables. So think Oreo cookies, disinfectant wipes, toilet paper, paper towels, all those things that you need to not only manage your household, but also your businesses as well. And we deliver that to anywhere in the lower 48 states. All the technology that powers that business, from the front end e-commerce systems to the inventory management system, warehouse management system, and even the robots that we use these days are engineered and built by us. All that technology is now packaged up and powers our e-commerce enablement side of the business, where we're beginning to license that technology to big enterprise retailers around the world. So e-commerce wholesale, e-commerce enablement is basically what BOXED is about.
Perfect. So yeah, that business to consumer business, is the one that people might know the best.
Sure.
Over 450,000 customers, an average order value of $96 in 2020. Can you just break down, some of the dynamics of this business? Who are some of the customers? How are you growing customers in this segment? In the B2C, industry.
Yeah, I love the fact that you mentioned where we were last year when it comes to not only customer count, but average order value. So AOV is so key on how we differentiate ourselves between all the other players out there, and also why we built our own technology. So the average basket for a B2C customer, the average has 8 items in a single order, 8 bulk items in a single order. So if you think about your own shopping habits online anecdotally, or if you just look at all of your orders over last year, it's rare that you're getting 8 items at once shipped to your house. So the technology to power that, the fulfillment processes to power that, it's all custom to us, not out of kind of luxury, but out of need, because not a lot of folks are shipping that much. Because we're packing so much into that single box, it allows us to actually make some money on a gross margin side of things, even though we traditionally ship and sell quote unquote lower margin items like cookies, paper towels, and such. One other thing to note is that most folks equate us with, Box, it's an online kind of consumables bulk wholesaler. It must be bi-coastal. We have a great business on the coast, but actually, if you look in some of the slides that we put later in the presentation that you have up, our recent survey counted almost 70% of our customers that responded were actually from small towns across the Midwest or rural counties all across the country. And so for us, that's a very differentiated demographic that's underserved traditionally by e-commerce.
Yeah, definitely. I see in the presentation, we see obviously some big name items, right? We see, well-known brands like Heinz, Bounty, and others. But one of the slides that stuck out to me is this Prince and Spring private label. Obviously we know some private label brands can, bring, better margins. And so can you talk a little bit about this private brand, that BOXED has and can, recommend to customers ordering from the platform?
Yeah, so it's another great bright spot for the company. It started off life as Prince and Green. It was a corner of kind of our office back in the day. But as we thought about filing the trademark, someone raised their hand very astutely in the meeting, was like, I think there's already a P&G out there, boys. So we actually went and changed it to Prince and Spring. I know they never intersect in New York City for all the Manhattanites out there, but it was the closest intersection we can get. So Prince and Spring is our private brand. As you can see from the slide, it's only 7% of our SKU count. We do limited SKU to make browsing easier. So it's already limited in terms of SKU count, but 7% of that already limited SKU count is not a lot of SKUs. So it's about 100 plus actual SKUs or items. But on 7% or on just 100 items, it accounts for almost 14% of our business, sometimes fluctuating up to 20% of our business. So we control the supply chain, we control the margins. And so it is a very good bright spot in our B2C and B2B business.
Awesome. And then, yeah, so you mentioned the B2B business a little bit. That's a segment that it looks like saw, strong growth prior to the COVID pandemic. Obviously, that disrupted the business a little bit, with many people working from home, businesses shut down. It looks like you guys, though, are ready for that business to come back. So can you talk a little bit about the post-COVID recovery of that business-to-business growth that the company had been seeing?
Yeah, it's a real good tie back to your original question when I first joined here, Chris, on why SPAC. And so, when folks think Box, it's like, oh yeah, I ordered bulk toilet paper from there last year in the middle of the pandemic. So our B2C business grew at a great pace. But at the same time, our B2B business, which traditionally was almost a quarter of our business, actually took a real big hit, saw some big headwinds because of, like you said, folks are generally working from home. The airlines that we service just weren't flying as much. And so being able to tell the story of how that looks in recovery mode as we go into 21, as we go into 22, was really a story that we can only tell through an S4 and through the SPAC way of going public. But overall, we service kind of small to medium-sized businesses. If you think about how they work these days, you walk into your typical office, the office manager, he or she is no longer that worried about ink and toner. or paper and pens. But they're really thinking about coffee and pantry. Like if we run out of paper here, everyone says, "No, okay, we'll go get more paper." If we run out of coffee and snacks in the office, this place is going to burn down by 5 p.m. And so people will have their pitchforks out. And so really servicing those SMBs with coffee and those supplies to run their business is what we do, as well as the enterprise in Fortune 500 and Fortune 100 companies. So we saw huge tailwinds in B2C, huge headwinds in B2B, but we're already seeing the country recover. So we're going to be a part of that recovery trade, we believe.
No on the no coffee. That's a no.
Yeah, I think you guys would just walk off the set if there's no coffee. Just,
I can only imagine, a place, with workers and when you don't have coffee. So that's a great point there, so on the flip side of, the negative impacts of the pandemic, one thing we've definitely heard more of is, the shift to online retail. And one of those areas that it looks like was underpenetrated was online grocery, where the US is actually lower than the UK and China, according to your presentation. Can you talk a little bit about how the US online grocery segment is growing and maybe how the pandemic, increased the rate of expansion here?
Yeah, if you just look at that industry, it's going to be about a 20% CAGR. There's folks that are a little bit under that, but projecting out way more in terms of that industry, but thereabouts, you see the number that we put up here, it's about 20%, we believe. And if you look at where we are today versus the UK versus China, we're still relatively underpenetrated. So there's still a lot of room to go in a gigantic, $100 billion market today. And so when you think about over the forecast period into 2024, it's going to be closer to a $200 billion plus market. And so we think as long as we get our fair share, as long as the other big folks are also getting their fair share, there'll be a lot of growth to go around here. And it won't be, hey, the US market is ahead of everyone else and who knows where the market goes. You can look at a litany of other countries where online grocery has seen outsized growth compared to the US. And we think that will be the future here as well. So again, it's not a zero-sum game. If you just look at the offline world, Costco didn't have to beat Walmart to build a very big business. Chewy didn't have to beat Amazon to build a very big business as well. We feel like the market's going to be so big and so much money is spent online and grocery these days that it won't be a winner-take-all game. Folks will buy food in different outlets.
Perfect. So, with going public, you now have, the money coming in from the SPAC merger, an easier access to capital here. One of the things I see in the presentation, is adding fulfillment centers. Can you talk a little bit about, so I'm here in Michigan. If I place an order, with BOXED, how quickly does that arrive? And how can more fulfillment centers maybe help with shipping times and accessing more customers in the US?
Yeah, shipping times and shipping costs as well. So right now we service about 91% of the country in 2 days or less, about 43% overnight. Free shipping, all via ground because we cut up the country into different zones. So you would only shop your local fulfillment center. So we're here in New Jersey right now. Folks that shopping out in Las Vegas, they're going to shop the Vegas fulfillment center. They're not going to see anything in our East Coast fulfillment center. But as we build more fulfillment centers from the 3 we have today to 8 in the forecast period, as we outlined, what you're going to find is the shipping time is going to decrease. We'll start to cover a majority of the country or vast majority of the country overnight. Again, all with ground and free shipping above certain thresholds, depending on how much you spend. What we also find that will help us do is because we're cutting the country up into smaller zones. The packages have to travel less and we get charged less, and we'll be able to pass along some of those savings along to our customers as well, and hopefully be able to grow our margin. The last thing there is that, remember, we build our own technology, even down to the fulfillment automation robotics. And so we can get into our newest fulfillment centers, the ones that are fully automated by our robots, for less than $1 million. And so as you look at the financial forecast, a lot of folks were shocked as we were doing the roadshow, where's the CapEx? You must be missing the CapEx line here. No, the CapEx line is there. It just only costs us about $1 million to get into a FC because we write the software, we build the hardware. So it's whatever it costs us to buy those raw materials.
Yeah, perfect. I know Mitch has some great questions on the technology side of things. One more from me before I turn it over to Mitch with those questions. We see in the presentation a goal of $1 billion in sales by 2026. Can you just walk us through, some of the big picture items? How does BOXED get to $1 billion in sales? What's the growth plan, and maybe some plans for, mergers and acquisitions down the road?
So absolutely, when you look at us again, as who I think will be viewed in the future as, hey, this was a prime candidate of why the SPAC product is good for the world and for the financial markets. This was a prime candidate, partially because what we want to show the public is that we're going to just grow at the same CAGR we were growing at. So if you look back 3, 4, 5 years, we're growing at that 30+% CAGR to where we are today. So after a wonky year in 2020, after $300 million injected into the company, we believe, and we think reasonably so, that we'll continue to grow at that 30% CAGR. The gross margin side of things as well, that's also very important. 14% in 2020, after shipping, after dunnage, after all those costs. That was actually negative 13 when you go back to 2016. So we've grown that by many, many percentage points. Now that we're starting to sell our software, now that we're getting to scale, another 16 points, we think it's achievable. It's actually less than what we achieved over that same forecast period in our last 3 to 4 years. So again, when you look at, and I really encourage everyone to take a look at the materials. It's a very simple kind of business plan that we have set forth. Additional headcount in terms of allowing us to have more sales folks in the B2B side of things, selling more software, actually having a consistent budget for marketing. These are all really simple things that we've had kind of inconsistent access to over the years, that with $300 million, we're going to have pretty consistent access to in the coming 4 to 5 years.
All right, I'm going to go ahead and jump in here and talk a little bit about the tech. Let's start talking a little bit about the comprehensive in-house and how it's a complete platform here from the storefront all the way to automation. And I think this is really important. I mean, we always move towards kind of more automation and convenience to go ahead and help those margins. How do you guys achieve this complete, and how's it really going to help the business in the long run, especially the automation side?
Yeah, it's been a long journey. Mitch. So, when we sat in the garage when we first started almost 8 years ago, we didn't have any of this technology. All we had was a giant button that took the website down in case we got overloaded with orders. On day one, we didn't get overloaded with orders, and so that button didn't need to be used. And so maybe there's a bit of hubris of why we designed that button in the beginning. But throughout the history of the company, what we found is that our key value proposition to consumers as well as investors is our large baskets. 8 items on average for B2C, 15 items on average for B2B clients, and that excludes the enterprise. Enterprise they're ordering truckloads of things. And so when you think about 8 items per basket, 15 items per basket, not a lot of folks are doing that. So we had to develop that technology from scratch. So everything you see here, storefront, biz ops, the seller tech, the ad platform that we built, where folks like P&G can come in and invest $100,000 into cost per click, kind of at the point of spend, ROI positive ad spend. We all built that ourselves, even down to the automation. So that allows us ultimate flexibility in how we are able to architect the platform. Simple things like coming onto our site and seeing the expiration date of the item you're going to sell. No other retailer that I know of in America has the technology or the wherewithal to do that today. Sounds simple, but because we built it all in-house, it allows us to do that. Of course, automation and being able to take fingerprints and footsteps out of the equation, increase safety as we send these boxes out the door, also increase margin for us as we begin to automate and further automate our fulfillment centers. So all of that combined allows us or is enabled by us building that tech ourselves.
Yeah, great. It's great to have an ecosystem. Let's go ahead and let's get into the next slide here that I want to talk about, which is, of course, the opportunity here and a service as service here. So one of the things that I really focus on is always trying to create that revenue, right? That if we could have recurring revenue, I mean, who doesn't like to see that at the bottom line? So, of course, this opportunity is massive. Let us know how you guys are really trying to attack this. And of course, coming out of the pandemic, when we're starting to see the companies really start stepping in.
Yeah, I hope all the folks out there watching this and are going to watch this on the replay really pay attention to this slide and this part of our business, because we think you get not only exposure to traditional e-commerce and e-commerce wholesale, the delivering of goods, but also the enablement of e-commerce for other companies, like the other e-commerce platforms out there. So this is really important for us. So because we built all that technology, that end-to-end technology ourselves, what we found ourselves is in a position where some folks were calling us and saying, well, there's not too many people I can call out there that has robotics, warehouse management software, inventory management software, the data models, an ad platform, front end kind of website and app. I can't access that with one call. You can call different front end e-commerce providers, whether if you're a small to medium sized business, whether Shopify or BigCommerce or any of these other folks. But that end-to-end system with one call, we feel like there's not a lot of folks out there. You basically count, of course, BOXED, Ocado in the UK is another big one out there. So we think there's a lot of legs to this. Our first client here, this is not vaporware. Our first client is already signed. Earlier this year, we signed with one of the largest retailers in the world, one of the largest retailers in Asia called Aeon Group, AEON, $83 billion retailer, did a fulsome RFP, looked around the world for technology and picked us. And we're going to launch with Malaysia with them in just a short time here. So we're projecting out $12 million in just our first year of selling software.
Excellent, excellent. Yeah, and I mean the future is definitely looking great. All the way up until I think it was we can come down and make sure here. There it is, that 2026 target of 106. Definitely going to be watching that as we continue to move forward. Next question that I have is going to be moving into the evaluation here. Let's go to slide 38 here, and let's take a look here. What I want to talk about here is when we talk about multiples, because EV multiples here in 2021 revenue is really a focus major in this market. I mean, when we look at it, I'd kind of compared, we're not talking about pets here, but I like the Chewy comparison just because it's kind of a fully online option for you. And then you can go and then get kind of a bulk options. They've been working on that, bundles and stuff like that. So I do like that 3.8 towards 3.0. How are you guys able to accomplish this discount? And I'm sure SVOK wasn't too mad about this evaluation.
Yeah, when you guys announced the deal on the show, I was watching and I was like, we made it. We're on SPAC's attack, man. And this was something you guys pointed out. I think Chris pointed out, he's like, wait a minute, I'm reading this, and the more I like it, I like it. The more I'm reading it, I like it because of this valuation. So we think there's a lot of upside here in terms of where we're coming out to market with. And so hopefully folks agree with us as well. When you look at kind of that Chewy comparison there, if we're successful in building just the Chewy for humans, I think when you look back at the $600+ million EV that the pre-money EV that we're looking at, it's going to be, I think, looked back on as pretty good value. And then you lop on some of the things that you saw on the right side there, some of the software comps, then it just totally blows it out of the water. So, and we think, again, folks are getting exposure to both because we have not only the physical side of selling items, but also the selling of the software that underpins that business. So we think it's a pretty good valuation and a fair valuation. Definitely.
Don't forget about that 42.3% revenue CAGR. I definitely like those numbers from my financial guys out there. Yeah. Let's move into something a little bit more fun. What I love, the customer service side, because I think this is so important in a business like yourself. So slide 18, I think, is really great to look at because, at the end of the day, loyalty is going to be so important, right? Having those sticky customers in a business like this is what it's all about. Because once you, like the same way we try to build loyal viewers for SPAC's attack, we want to go ahead and give them that value and then them come back. So let us know, how's the loyalty here? I mean, 92%, that's as good as it gets here on the chart. So let us know.
Yeah, so when you look at an even more objective kind of reading, our net promoter score, our most recent read was a 69, which is really high when it comes to kind of anyone selling physical goods out there. And so we're really proud about that. The stickiness is good for our business. When you look at especially the B2B customer, it's really, really good. Just because, when you think about businesses, once they order these things, they have the credit card on file, we deliver to them on time in full. And there's that kind of win-win scenario that makes not only B2C, but especially B2B very, very sticky in terms of a customer base.
Definitely. I'll point out one message on here that really stood out to me right here. Thanks to Boxed Wholesale, ordered this last night, arrived in less than 24 hours. Now our league stocks concessions before the season starts. So I think, hey, moments like that, you definitely help them out. I mean, I remember going to the concession stands. I want my concession stand stocked up. So I think that's definitely a solution.
This is why I love the show. You guys actually read the materials and you guys kind of like dig in. You're reading that exact quote there. And you might think out there, anyone watching this, well, why would anyone use Box? Like, can I go on Amazon or can I go? Well, there's a perfect example. That concession stand, they're going to probably order $500, maybe $1,000 worth of snacks from us. And when you think I got to stock up a full concession stand, a lot of folks their initial reaction is not to shop the regular places where they just buy a single box of Cracker Jacks and get it delivered in 2 days or less. So that wholesale experience, that's a perfect use case, especially if they're living out in rural areas. What else do they really have access to? There's not a physical Costco probably close to them. There's not a physical Sam's Club close to them. And so we are that stopgap for a lot of folks out there that are sometimes heavily ignored.
Yeah, I love the hashtag feed the players. So it looks like you fed the players. So I think they'll definitely appreciate that.
We did. And, last year we had a lot of those in terms of customer service tickets that said, like you're a lifesaver because we got people toilet paper. And so I never in a million years would have thought that would have been the case. But
hey, it was gold.
Here we are, man.
Liquid gold. Yeah, liquid gold.
It was funny because I also got messages from, middle school friends, high school friends I hadn't talked to in years were texting me. It's like, hey, listen, brother, we haven't talked in years, but you got that paper?
You got that paper, man?
I was like, yes, I do. And I'll drop it off at your house, in this shady kind of back alley deal. But yeah, so it was a wild year for us.
So just leading away and segueing into, let's take a look at the customers, right? And so what would you describe as your average customer? I mean, we have different segments here, but what would you describe as the average customer?
Yeah, so our average customer these days does not actually live in an urban area. So a lot of the folks out there that say, well, I have all these different options. That's great if you live in an urban area, even like I do. There are quite a few options. But especially as you go out into the deep suburbs, small towns, and especially if you go out into rural areas all across the country, that's becoming our core customer these days. Folks who don't have access to physical wholesale, and because of the pandemic, are starting to come online. So when you think about e-commerce and why it's growing so fast, Mitch, especially in grocery, it's not that tech-savvy folks like me, you, or the folks watching this today were like, oh my gosh, I suddenly discovered online grocery. Like, what a great thing. We all knew about online grocery. We're tech-savvy, tech-forward. We knew about it. It's actually a lot of the folks who traditionally didn't have access to online grocery, didn't think online first because there weren't great options, that are beginning to come online. And we think that's going to be a good tailwind for us.
Yeah, one of the things is you don't know until you try it, right? One of those kind of things. And a lot of things like that are in life. We don't know the convenience of it until we actually try it. And then we're like, man, that was pretty convenient. I mean,
so Mitch, what you were saying before about the dial-up, like, I don't think anyone who is from that era will ever forget the first time that they dialed in. There was like that sound, and you're just like, "Oh my gosh, I just broke my machine." So,
what's going on there?
Yeah, and then you got on to whatever you like, a BBS board or AOL or Sierra, whatever you guys were using back then. I mean, it was just a magical experience, and I think it's the same thing with technology, time and again. The first time you get into an electric car, the first time you get into, or first time you ever use your first smartphone. I still remember I was using a flip phone, and then, someone had an iPhone 2G, like the one with the silver back. And I was like, what sorcery is this? I can't believe this is happening. And so I think with online grocery, the same thing. Like, very few people would shop online and think, wow, that was a really dumb thing, and this is going to go away. So yeah, I think it's the future.
You could just think about it with clothes. I mean, there was at one point, I don't think there was a single person buying clothes online, but now majority of clothes is bought online. Shoes online, everything online. So what's not to say that we just continue to move forward and continue to move into the convenience. I know I use services to go ahead and fulfill my needs, and I think that we're going to continue seeing this trend grow. Let's go ahead and bring Chris back.
One last thing there, Mitch. It's just when you look at the adoption curves of e-commerce in different industries, they generally only go in one direction. You don't see like, oh, huge adoption and everyone decided that was dumb to buy that online and then go down. So we think there's a lot of runway for us here.
Yeah, perfect. Chieh, I'm loving this interview, full of energy, talking dial up, talking, liquid gold, with the toilet paper shortage. So some great answers here. We have a couple questions from the chat here. One of you already touched on, but I'm wondering if you can expand. This is for one of our loyal viewers, John. He's wondering, what does the new relationship with Eon all about? Providing total warehouse system and software for them or more? Can you maybe just break down some of the terms of this deal?
So John, great question. Well, great question from John. Question right back to him is, did he smash the like button yet? Because, Mitch says that and so it should be a rule from now on. If you didn't smash the like button, you ain't asking a question. And so I'm kidding. But John, it is a great question. We've got asked a lot on the road. And so Eon, big retailer, for their Malaysia business unit, as a first go at it, they're licensing all the software that powers the Box business. They're white labeling it, or we're white labeling it, and basically overlaying it their in-store and online network. So when you go into an Eon Malaysia mall or one of their supermarkets or their department stores, it's going to be Box software that's really powering a lot of that omni-channel experience. We did not license the robotics to them just yet. But in the future, you could definitely see that being potentially part of that package. So again, front-end systems, inventory management, warehouse management systems, all the software. We're not building physical infrastructure for them, like physical warehouses for them or fulfillment centers. We're using our software to power that for them. So all the software that Box built, white label for an enterprise client in Malaysia.
Perfect. And then one more question here from NCal, another loyal viewer here. What is their strategy to gain customers from existing big guys like Walmart, Costco, and Amazon? Is it organically through promotions or paid ads? Can you just break down, a little bit of that customer acquisition, targets for the company?
Yeah, so traditionally word of mouth and folks just talking about us at the concession stand and at especially different small and medium-sized businesses, that was very heavy for us. When we now have access to all this capital that's about to come in, we're actually going to drive awareness. And so we traditionally haven't done big brand campaigns, big TV ads, and big kind of paid advertising campaigns. So we think this is the first time we'll have access to the budget to really go deep into that. And so other people will be able to hear about us. So we've also heard anecdotally is that, when we present Box to folks, they're like, wow, this is probably one of the biggest revenue companies that I've never heard of. How did that happen? Well, word of mouth and not having the amount of capital to really push marketing is partially of how that happens. But now, again, through the SPAC product, we're able to raise a lot of money and be able to actually spend consistently and smartly in paid advertising channels.
Awesome. Well, I think that's going to do it for our questions, those questions from the chat. You guys heard it. Chieh said, smash the like. Another great interview here on SPACs Attack. Chieh, I got to say, big shout out to you for, the praise of the show, for being a viewer, for saying you made it when you were, mentioned on SPACs Attack. It's so great to hear, CEOs that watch the show, that like the show. So, I got to say my hat's off to you for that as well. So again, joining us on the show today, Chieh Huang. He is the CEO and co-founder of BOXED, the company going public with Seven Oaks Acquisition Corp. That ticker is SVOK. Thank you again, Chieh, for joining us on the show today.
Thanks, gentlemen. I will be in the comment section in future shows, so watch out.
Smash that like. Just type that.
Watch out, guys. Hey, we definitely appreciate it. Definitely appreciate it. Thank you.
Thank you so much.
All right,
Oh,
guys, another exclusive interview, and that's really what it's all about. As you guys see, not only getting the information that you guys want to hear, but having a good time. That's what it's about, guys. Give us a big thumbs up, hit the share button, let everybody know how great of an interview this was so that if they missed it, they can go ahead and see this. What you think, Chris?
Yeah, what a fun interview. We have fun on SPACs Attack, right, Mitch? I mean,
It's the only way.
what a nice, interview. Those nice compliments from Chieh, that's always nice to hear, that CEOs are watching the show, because again, even if your company does a SPAC deal, you might want to hear, about others in the sector. You want to hear about how SPAC deals are helping other companies. So I think that's some great research there too. But yeah, it looks like you guys in the chat, are loving this interview. The honesty we got from Chieh, some great questions there from the chat as always. Mitch, this company, I like your questions on the technology, right? That was some of the stuff I really wanted to hear more about. We all know about, shipping items to houses, e-commerce, online grocery, but to hear, some of the SaaS business model, the selling their product to other companies, with the inventory management and all that, I really like that talk. So, that was the key for me.
One of the things that you always ask yourself is, could I work for that CEO? Sometimes I think about that for like kind of when I see a company and I'm thinking about investing in it, that's when I buy a CEO, right? And so, hey, shout out. I got that good feeling. I'm sure everybody else got that good feeling. Mentioned in the chat, Jordan mentioning here, great demeanor. Hope the company does great, for sure, holding long term for them. And I agree. Great demeanor. And with that being said, a leader, right? You always need a great leader behind a great company. So definitely a shout out. We'll keep it going. Let's talk a little bit, guys. If you guys haven't checked them out, I know that they're working on getting that name out there. So might as well go ahead and point it out here, guys. Check out at BOXED Wholesale. At BOXED Wholesale. That's their Twitter. They got over 20,000 followers. They put up flash sales on there, guys. So who knows? Maybe you get a little flash sale action and get a little discount also. So wanted to give that information out there. Check it out. Looks like my man Matt Higgins also checking them out. Gary V also following there. So that should tell you enough, right?
I mean, if Gary V follows them, that's a big
Gary
sign
V, Matt Higgins
support. So
they know their businesses, right?
Yeah, let's face it. We know e-commerce, we know online retail, but this company, I think maybe is under the radar. And I love the energy from Chieh. And again, that's what we're all about on the show, Mitch. Is I can read the information, right from the press release, from the presentation, but to hear the CEO, digest that information, tell us why it's important. Again, I like to think I'm pretty smart at reading, through the lines, but to hear some of this spelled out, I think really helps, make the investment case for SVOK here. So, I love this interview, man. I got to tell you that.
I like it so much. You guys don't hear me do this often. I'll give another shout out. I'll say BOK Life. Save 15% off your first order.
There you go. Hey, you're selling his product.
The BOK Life.
He's getting us likes. That's a mutually beneficial relationship. So shout out to Chieh again. Yeah.
I don't like to leave my house. I'll tell you one thing. I've been to a couple Costco's before. Not the most fun, and also a little bit dangerous when you see those TVs on the left-hand side. So who knows? Maybe Box starts selling some TVs. We'll be looking for that.
Yeah, and remember during the pandemic, right? The toilet paper shortages, and you saw, the lines of people at Costco, and the shelves not having it, and then you had a company like Box where once people saw, hey, I can get toilet paper shipped to my house in bulk from this company. So you try it out, and then what happens? You end up liking it, right? They have a 90% customer rating. Like, that's awesome too, Mitch, which you brought up, in your questions. Customer satisfaction, right? I used to work in restaurants. It's all about customer, relationships. And
loyalty,
this is a company proving, that they care about their customers and the loyalty. And, again, I can't say enough about, just seeing Chieh smile and laugh with us and tell us about his company, I think is a positive sign. And Mitch, I wish I could have said it myself. You said it, a CEO that you would work for, right? That's a big deal, to really believe in something like that.
Yeah, no, I mean, one of the things that you can always do is try to get a read from people. And that's what I try to do all the time. And when you get a good read, you got to go with it. Right here, one of the things that I'd point out on this stock, I'm looking at the daily chart, starting to really assess when I want to start taking an investment. So I'm going to be paying attention. I'm not invested in this one right now. Full disclosure, not in this one, but definitely taking a look at it here. One of the things that I'd point out is we went into a little bit of a bearish pattern here when we went crack down here after kind of right here on the pop on the 11th. Now you've had a down, up, one up, down to second up here. It could test back down below, maybe closer towards the 980s. One thing to keep an eye out, though, is this big volume that came in on that announcement with 5.87 million shares traded. So that high is very important. That high there is 988. We haven't cracked that level multiple days. You see how it's just sideways? So that's why it's so important. It could have been a big plus size order there, and you want to see it get through that level and close above that level. And so now that we're on this sideways trend, do we come back down and test that level here, like this 980s, or do we come up through those 988s? That's what I'm going to be watching for here on SVOK, Seven Oaks.
Yeah, and Mitch, if you scale back a little on that chart, you know, back to March. So you see in March, that's when this was rumored. So if you look at what happened when this deal was rumored, that spike there, that volume bar there, you know, people liked this deal. They liked the company and they were interested. And then, of course, we saw a couple months of, you know, SPACs on the decline, falling out of favor. So what happened was this thing, you know, fell below $10, right? As we saw several, you know, pre-deal announcement SPACs drop below $10. And now when the deal was announced, you know, you got some positive momentum and you're seeing that sideways action now. You know, again, this is one that's got some catalyst coming, right? It just got announced in June. So you still have, you know, a deal vote probably coming in the third or fourth quarter. You've got the announcement of the deal. You've got the vote on the deal. And I think you're going to get more, you know, press, more coverage from a company like this. So this is one of those where by the end of the year, I think gets some more interest and you're going to see it trading, you know, over $10 consistently as it gets closer to, you know, completing that merger. But, you know, definitely an exciting company to watch here.
Definitely,
you know,
Jay talking about in the chat here. At the end of the day, it's convenience.
Yeah, absolutely.
Convenience.
Shopping online. I mean, how long have we done that now with, you know, Amazon, all these other services, and it's just natural, right? To bring, you know, some of the online grocery to also, you know, where you don't have to leave your house. You don't have to go fight with lines. You know, you don't have to worry about stuff. But it looks like we're hitting noon, Mitch. I mean,
yeah, we're hitting noon. I wanted to bring something up before we get on out of here.
Go ahead.
Just to mention Maps is on the move. So I wanted to bring it up there. You know, we like to definitely keep you on target with stocks that are making moves up. So Maps, as you can see, the last 15 minutes. So the last 15 minutes. So one of the things is when I see a 15-minute breakout, if it's like the last 15 minutes, I'll actually go back to the 15-minute chart because you want to see that kind of breakout. How big was that extension in 15 minutes and where could the pullback come back to? This is the important thing of using multiple time frames. I think too many traders out there, especially if you're a trader, only use one chart, and that's definitely a deterrent. It's kind of going to hurt you because you're not going to see the levels a lot of the times. It's not that you can't see them on a shorter time frame, but a lot of the times you're going to be able to miss the pullback looks. So, I mean, you guys know how I am. I definitely like to get my pullbacks. And so right here on the 15-minute, yes, we came back down towards support. We tried to crack it multiple times. I'm going to show you right now. So this was the support, right? Right at the pre-market hour. It comes right to it, right at the market. What does it do, guys? It starts to try to crack it. Let's do some drawing here. So if you look at it, it tried to crack right here, right at the open, right? And then it comes back up, bounces up. So like you get this downward action, right at the open, first trying to break, pops above it, right? Comes back down, second time to break it. Then comes back up, tries to push out again. Then comes back to break down again. Third time to try to break down, guys, the rule of three. Once you see those rule of threes, a lot of times what you can do is you can just go based off of that support right underneath it. Like call a support underneath that. Now you at least have your risk management and you can look for that move back up towards the pre-market high. pre-market high being up here towards, let's say, 1890s. Just even that alone, that's a good look. You're talking about a risk that's kind of more of this block look, and you're talking about a reward all the way up here. You're definitely talking about it better than the 2-to-1 look. Sorry for my horrible drawing skills, but
I love it. That's an NFT right there. I'm gonna bid on that. But Mitch, it looks like we're out of time. Couple notes real quick. I know someone in the chat asked us yesterday. AvePoint. We have TJ joining us on the show once again tomorrow to talk about AvePoint. AVPT recently completed its merger. And also, Mitch, I know we've talked about sports. We have the NBA Finals going on. And wouldn't you know, there's actually a SPAC that is involved. And I'll tell you how on tomorrow's show, which former SPAC you may want to take a look at if you like NBA basketball. So a little preview there. But that's going to do it. Stay tuned for Power Hour next. And as always, SPACs Attack, 11 a.m. We'll be back tomorrow.
Like always, guys, we'll see you next time on the SPACs Attack.